Hello and welcome to this week's video where I discuss what I believe is important for individual investors to think about over the next 5 to 10 business days before they make their investment decisions. Today we're going to talk a bit about seasonality. We've seen the markets very choppy for the month of September. Is this a buying opportunity or should investors really be scared? Supply chain issues. A lot of companies starting to report that they're having supply chain issues. They're not able to get the right equipment, the right materials to build what they need to build to become more profitable. And Fed speak. The Federal Reserve spoke recently discussing how they need to taper sometime in the next few months. They believe that being as accommodating as they have been is no longer necessary as this economy progresses and moves forward over the next 6 to 12 months. Seasonal factors affecting the market. We've discussed this many times on my radio show and on previous videos as well. A lot of individual investors have been asking me, Alan, is this the time where we should be cautious, maybe not put as much money to work in the market? September is usually a bit of a difficult month, followed by October. My answer very quickly is you really never know. We've seen markets pull back for 4 or 5 days in a row, only to be followed by a couple of great days in the market. We started off last week to the downside, only to end the week to the upside. So I believe these seasonal factors can play a big part in what people feel and what investments they make. However, make no mistake about it, this market, in my opinion, will continue to move higher based on low interest rates, not based on necessarily what month of the year you're investing in. So I think individual investors need to keep that in mind. The markets will be choppy, there's no doubt about that. But I think we are moving higher as we progress towards the end of the year. A number of companies recently have discussed or mentioned that they're just not able to get the materials they need to basically conduct business. They've had to slow down or shut down car plants. They've had to slow down in terms of production in general, whether it's because they couldn't get enough aluminum or steel or chips for cars. Whatever the case is, these companies are now coming forward and saying the supply chain issues that they've experienced, I guess maybe 6 months ago, are still with us. Now, some individual investors will look at this as a negative, maybe sell into that announcement. However, I believe this could be a buying opportunity. You see, there are a number of chip makers, as an example, that I think will be busy for many months to come. Why wouldn't you want to own shares of a company that perhaps has pulled back, but is a good quality name, and where the demand for their products will remain constant for many months to come? I think that could be a good buying opportunity. So if you're an investor today looking for buying opportunities, look to some of these names that have sold off because of supply chain issues. I think eventually they will be worked out and these stocks will resume their climb higher once again. Recently, we heard from the head of the Federal Reserve, Jerome Powell, talk a bit about how he believes that tapering is in order at some point over the next few months before the end of the year. We've also heard from a number of Fed officials and how they believe tapering is necessary as well. So make no mistake about it. If you're an investor out there that is considering investing but not sure whether the Federal Reserve will be a little bit less accommodating going forward, I think that's your answer. I think the Federal Reserve will be less accommodating. I think interest rate increases are now in the cards for perhaps as early as next year. I think we could see higher interest rates in the second half of next year. But in my opinion, once again, interest rates are coming off rock bottom levels, basically zero right now. If they were to begin raising interest rates middle of next year, I think it would take a number of quarters before we start to see interest rates really make a big difference. Once again, you're looking at zero. So if we go from 0 to 1 or 0 to 2%, still not enough, in my opinion, to make a big difference regarding TINA. There is no alternative for individual investors. As we move forward, there is no alternative if you're looking for growth, even if the Fed begins tapering and eventually raises interest rates. I think individual investors need to look to the stock market for growth, and there is no alternative to the stock market.